Welcome back, but now you're watching Trading Hour. I'm Reema Tendulkar, with me Sonia Shenoy, and to take stock of the markets and where we're headed next year, we're joined by Ashutosh Bhargava, Fund Manager and Head of Equity Research at Nippon India Mutual Fund. Ashutosh, apologies for keeping you waiting. We were just talking about Reliance Industries and what a great wealth generator it's been. The stock has been compounding at an average of 20% ever since its listing. But I was looking at your top holding at your fund, but Reliance Industries doesn't find its way in the top 10 holdings. Could you give us a reason why?
So, hi. I actually can't talk about an individual stock, but all I can say it's an important part of the index, and we do have holding as it's in public disclosure. But it will be difficult for me to talk about an individual stock.
Sure, got that. Let's also just glance once at the market because we haven't done that in a bit. The Nifty is very quiet, but the good part is that the mid-cap index, the Bank Nifty are holding in the green right now. And a lot of stocks, actually, auto names are all picking up today. Maruti, M&M are all up in the green. Hero MotoCorp is also in the green right now. And Titan is your big mover, up almost 3.5%. Ashutosh, welcome to the show. Happy New Year to you. Just in a couple of days, we'll be, entering a brand new calendar year. How are you feeling about the market now? Do you think there could be outsized gains this year? And what are the sectors that you're bullish on?
Hi, Sonia. We think, the coming year would still be difficult in the sense that we are not expecting a big outsized returns. We think where the global interest rates are and where they would remain means that equity upside in general would be kind of capped. In that kind of backdrop, we are still very positive on domestic-oriented sectors. We still think that yes, India's real and nominal GDP growth would slow, but still would do much better than most parts of the world. And in that context, we are bullish on sectors like financials, industrials, and while we have reduced some bit of our consumer discretionary holdings, net, we are still positive on that theme as well.
So while you've lowered your consumer discretionary holding, what is it or where is it that you've increased your allocation and exposure?
So why we have reduced, because some of these sectors had run up a lot, like retail, hotels, etc. And this is more of a weight adjustment. We have reduced some profit booking in those sectors. Apart from that, we have increased allocation in select pharma names. We were underweight as a house on pharma, so we have reduced some underweight on pharma, and also some underweight in oil and gas name, including the largest company, as you were just discussing before.
Sure. In your fund, you also have some of these names in the defense space, Hindustan Aeronautics, Bharat Electronics, and they've given you great returns this year. Some of them have more than doubled. Would you churn out or would you continue to stay invested?
So we think that the bulk of the rally is kind of has happened, but we still think it's a multi-year theme. So we are not taking money out, but we also think that this perhaps would not be the best time to increase allocation in this particular theme. We think the order books perhaps would, not grow the momentum that we have seen the last few quarters. That perhaps would abate. And in that context, there could be a period of some time correction in these stocks. But from a medium to long-term perspective, I think the localization theme, as far as defense sector is concerned, is a very powerful theme, and we would like to participate in that theme from medium to long-term perspective. But some near-term consolidation cannot be ruled out.
Ashutosh, has IT bottomed out, or do you think it will bottom out? And if yes, if the stocks head lower by, say, 5 to 10% post the Q3 earnings season, would you be a buyer or would you wait for lower levels?
We think that there is some more downside to the earnings in these companies. So what has happened, consensus has cut down on the margin estimate if you look at next 2 years. But if you look at the top line estimate for most of the IT names, consensus still is very positive. So we think that there could be some cut as far as the revenue assumptions are concerned. That could happen perhaps in the next few weeks to months, where a lot of these corporates would announce next year budgets. And if there is, this thing pan out, we think we could get a better entry, and definitely at that point of time, we would look to reduce our underweight in this particular sector, because we have been underweight on IT, wherein we have been overweight on domestic sectors like banks, etc.
Okay. All right. Have a great one, the new year that is, and we will speak to you again very soon. Ashutosh, thanks for joining us on CNBC TV 18. We'll take a quick break on that note. On the other side of the break, lots more coming up. Very quiet day so far, but lots of stock ideas coming up in a bit.
जिंदगी को दें रफ्तार।